2019 earnings conference call. We have with us Mr. Ravi Jaipuria, Chairman of the company, Mr. Varun Jaipuria, Whole-Time Director, Mr. Raj Gandhi, Group CFO and Whole-Time Director, Mr. Kapil Agarwal, CEO and Whole-Time Director, and Mr. Kamlesh Jain, CFO and Whole-Time Director of the company. We will initiate the call with opening remarks from the management, following which we'll have the forum open for a question and answer session. Before we begin, I would like to state that some statements made in today's call may be forward-looking in nature, and a detailed statement in this regard is available in the results presentation shared with you earlier. I would now request Mr. Ravi Jaipuria to make his opening remarks.
Good evening, everyone, and thank you for joining the call. I hope all of you had the opportunity to go through our results presentation, which provides details of our operation and financial performance for the quarter ended 31st March 2019. We have started the year on a strong note, delivering a robust performance of all fronts, with top-line growth growing at 24%, EBITDA growing at 26%, and PAT growing at 103% in quarter one. We have recorded volume growth of 12.3% in quarter one 19, driven by strong growth in our international operations, especially in Morocco and Zimbabwe. Better product mix and higher realizations in international operations drove value growth. India volume growth came in lower at 4.6% on account of the extended winter and late onset of the season with Holi in the end of March. However, the summer season has begun well, and we are confident of seeing acceleration in our sales trajectory in India as well enter the peak season. We have also been able to drive significant expansion in our gross margins and EBITDA margins in quarter one on the back of benefits realized from consolidation of sub-territories acquired in 2018. This demonstrates our strong execution capability and ability to successfully replicate and leverage the learnings, knowledge and mastery over the process that we have attained in one territory to expand into the other territories. We are happy to report that we have recently concluded the acquisition of franchise rights in South and West regions from PepsiCo for a national bottling, sales and distribution footprint in 7 states and 5 union territories of India. This consolidates our dominant position as a key player in the beverage industry. VBL now accounts for more than 80% of PepsiCo's India beverage sales volume in India from a 51% earlier, and has expanded its presence to 27 states and 7 union territories across India. We are confident that this development will help us acquire greater scale, operational productivity and efficiency, leading to higher revenues and profitable growth. We should also generate better asset usage as the seasonality in these regions is relatively lower. Further, we are pleased to share that the bottling appointment and trademark license agreement for India with PepsiCo India has been extended till April 30th, 2039 from October 2022. Earlier, further strengthening our close to 3-decade-long partnership. We are excited about our prospects. Going into the peak summer season, we will be focused on consolidating and unlocking value from the recently acquired under-penetrated sub-territories in India by strengthening distribution infrastructure and increasing availability. The acquired sub-territories provide huge opportunity for driving volumes, gaining market share, and provide significant operational leverage going forward. We will remain agile by keeping on top of macroeconomic trends and changes in consumer preferences, and adjust our portfolio and process accordingly, offering innovation and choice. I invite Mr. Gandhi to provide highlights of the operational and financial performance. Thank you.
Thank you, Mr. Chairman. Good evening and a warm welcome to everyone for joining the investors call. Let me provide an overview of the financial performance for the first quarter ended 31st March 2019. As you are aware, given the seasonality in the business, it's best to monitor the business on an annual basis as a significant portion of the revenues are realized in the April-June quarter. Revenue from operations grew 24.1% year-on-year in quarter 1 2019 to 13,591.5 million rupees. Volume growth was robust at 12.3% as total sales volume increased to 90.3 million cases in quarter 1 2019 as compared to 80.4 million cases in quarter 1 2018. This was on the back of strong growth in the international operations in Morocco and Zimbabwe. CSD constituted in this quarter 71%, juice 6%, packaged drinking water 23% of the total sales volume in Q1 2019. India sales volume grew by 4.6% in Q1 2019, impacted by the prolonged winter season. As noted by Mr. Chairman, the uptick since the onset of summer has been encouraging and we are optimistic of driving improvement in our sales velocity. Better product mix with the introduction of Sting, Tropicana, etc. and the higher realizations earned in the international operations have resulted in value growth of 11.8% approximately. EBITDA increased by 26.5% to rupees 2,183.8 million in quarter 1 2019 from rupees 1,726.9 million in Q1 2018. Gross margins expanded 85 basis points year-on-year to 55.9% and EBITDA margin expanded 29 basis points year-on-year to 16.1%. We have been able to drive margin expansion on the back of operational efficiencies, increase in organic volumes and consolidation of contiguous sub-territories acquired in 2018. Depreciation has increased over the last year on account of inorganic expansion. Finance costs have remained stagnant even after considerable organic and inorganic expansion during 2018 and in Q1 2019. That increased by 102.9% to rupees 400.4 million in Q1 2019 from the rupees 197.4 million in Q1 2018, driven by robust volume growth. We have recently concluded the acquisition of franchise rights in South and West regions from PepsiCo at a transaction value of rupees 18,025 million, including manufacturing facilities. Given the growth prospects and promising earning potential, the acquisition comes at a very reasonable valuation and offers an attractive payback. The acquisition will be funded partly through internal accruals, debt, and rest through equity. We expect our balance sheet to remain healthy post the acquisition as we continue to see strong cash generation. With our existing 20 state-of-the-art manufacturing facilities in India, we have added one newly installed facility at Pathankot and acquired 9 new manufacturing facilities in South and West region under transition and also own 6 manufacturing facilities overseas. This makes a total of 36 state-of-the-art manufacturing facilities owned by the company. Our distribution infrastructure is strengthened with the 90-plus depots, 2,500-plus owned vehicles, 1,400-plus primary distributors, and have installed 750,000 busy coolers. To conclude, we enter the peak season on a strong footing with our fundamental strength, strong sales and execution capability, market leadership, attractive geographical diversity, and diversified brand portfolio. We are well positioned to satisfy evolving consumer preferences and create sustainable value over the long term. On that note, I come to an end of the opening remarks and would like to now ask the moderator to open the line for the Q&A. Thank you.
Thank you. Ladies and gentlemen, we will now begin the question and answer session. Anyone wishing to ask a question may please press star and 1 on your touchtone telephone. If you wish to remove yourself from the question queue, you may press star and 2. Participants are requested to use handsets while asking a question. Ladies and gentlemen, we will wait for a moment while the question queue assembles. The first question is from the line of Sameer Gupta from India Infoline. Please go ahead.
Hi, sir. This is Percy Panthaki here. Sir, congrats on a good set of numbers. I just wanted to understand the growth in your international business because this quarter it is in high double digits. So just wanted to understand if you could give some flavor geography-wise how the growth has been and what have been the issues in each of the geography, if any.
So our growth has been quite remarkable in Zimbabwe and Morocco. And Morocco is because we have added a new line of Aquafina water, and water is a big category in that country. So even our soft drinks has grown in double digits, and water has really put us in a very commanding position in that country. And Zimbabwe, as it is growing in a fabulous way for us, and we are growing more than double digits in Zimbabwe and continue to grow going forward.
And sir, the Sri Lanka performance, has it sort of stabilized after that sugar tax issues and all? Is that back to growth?
Well, Sri Lanka had fully stabilized and we were doing well. We had started a path of growth, but unfortunately with this new calamity, I think we might still struggle for another month or so because, there's a huge curfew everywhere and there's a problem. So that might be something which is not within our hands.
Okay. And secondly, just wanted to check in Zimbabwe, what would be your market share currently?
Well, currently we should be at about close to 50% plus.
Okay. So then the kind of growth that we are seeing in Zimbabwe, I mean, at this kind of market share, are we expanding in nearby geographies outside Zimbabwe? Is that how? Otherwise, I mean, the kind of growth that we are seeing at this kind of market share is quite surprising, sir.
No, actually, we have been very active and we have been we have really done a great job in going what we call the go-to-market business in Zimbabwe. We have got the capability of production at a very reasonable cost against our competitor. Our competitor is very top-heavy, and we have put the pricing at the right pricing so that we are competitive and growing at a base and we have spread our distribution in every nook and corner of Zimbabwe. And also, of course, we are exporting to Botswana and some to Malawi.
Right, sir. And finally, can you give us CAPEX guidance for CY20 and CY21, of course, excluding the Pepsi payout, at a consol basis, including the international geographies?
Well, we are not looking for major CAPEXs. As per our original guidelines, that it would be less than our depreciation.
40% of depreciation.
So less than half of our depreciation. And we have enough capacity in our original territory as well as the new territory which we have acquired. Leaving aside, if some territory grows faster and you might have to tweak in and add a little bit here or there. And of course, we'll have to keep on putting the chilling equipment and the marketing assets. But our guideline for the next 2 years is to make sure we keep it under the less than 40% of our depreciation.
And this includes the international geographies as well, at a consol basis, right?
Yes, yes.
Okay, sir. That's all from me. Thanks and all the best.
Thank you, Prashant.
Thank you. The next question is from the line of Pradesh Chera from Lucky Investment Managers. Please go ahead.
Yeah, sir. Thank you for the opportunity. I just have 2-3 questions. One, if you look at the revenue growth and the volume growth, the difference number is about 12%. So just wanted to understand the realization part and the growth rate as to why the difference is high and why the growth rate is so high.
This is because of the mix which has undergone a change. The mix of, the Tropicana has come in, which is high value, and the value for that is just double. That's the main reason for this. And the second comes from Zimbabwe, where the realization is much higher. There, what happens is, one, what we realize, and then about the currency when we adjust. So net, if we do maybe the same, but we have to take the realization at gross and then any currency fluctuation at the below. So post that, it will, come to the normal way. We have to make these two adjustments in the realization.
So if you could just tell what would be the currency depreciation-led growth in the top-line growth?
We will have to calculate that separately, but these are the two major components why it is, the realization is higher.
Okay. And in the 90 million cases, you said 4.4+% growth rate is India. So how many cases we sold in India? I couldn't actually see in the presentation.
India, in this quarter, we have sold 72 million cases.
And international is the balance 18 million.
That's right, 18 million.
And in this 18 million, how much is Zimbabwe?
Zimbabwe is 6.29.
Okay, 6. Okay. My second question is, when will we start consolidating Pepsi, the acquisition that we did, and what is the EBITDA of Pepsi acquisition at the time of acquisition?
See, we will consolidate. So we have already started consolidating because we took over on 1st of May. As far as EBITDA of Pepsi is concerned, they don't share with us their books. So that we are not privileged to, but it's the same business what we are doing. And going forward, there's no reason why their EBITDA should not be the same as what we have.
Okay. Current EBITDA at the time of acquisition, should it be similar to what you are currently doing?
We don't have access to their books. Okay. So.
But it won't be significantly different. Is that what you are highlighting?
I'm saying going forward, we will consolidate and make sure. I can't answer how well they were doing or not doing. Okay. It's very difficult because their expenses are totally different than ours.
Okay. Okay. And lastly, congratulations on the margin side, considering that we did some acquisition last year and we are consolidating it well. So just wanted to know if this margin expansion that we see will continue for the full year, and what kind of upside to these margins exist on the existing consolidated or acquired business ex Pepsi.
See, as I had mentioned before also, our margins are one of the highest in the world. And I think if we can maintain these margins and with a tweak, if we can grow a little bit better, I think the real growth will come from volumes and we can keep maintaining our margins. It will be a very good business proposition. If you look at any of the companies which is on the in the stock market, in the soft drink business, our margins are one of the highest in the world.
Okay. Thank you and all the best to you, sir. Thank you very much.
Thank you.
Thank you. The next question is from the line of Varun Goenka from Reliance. Please go ahead.
Good evening, sir, and congratulations for last 2 years of super performance and winning this all-India territory from Pepsi.
Thank you.
My question is around volume growth. If you see Coke across North America, South America, and China, somehow it tends to win in all the categories, sparkling, still, juices, or other product categories. VBL in North India has, whenever it's taken over a territory, has always gained and, made the difference between Pepsi and Coke same. So going forward, what could be our product differentiations or distribution-related differentiation so that Pepsi can materially win in India? Somehow, in other countries, it has lagged Coke. Yeah.
Well, it is not so. I mean, you have named few of the countries where Pepsi is behind Coke, but there are a lot of countries where Pepsi is way ahead of Coke. You look at Middle East, you look at Saudi, you look at Dubai, UAE, you look at Pakistan, you look at, there's so many countries. So, you look at Vietnam. So it depends. But obviously, Pepsi is a conglomerate in a lot of fields. Coke is only in the soft drink business. In juices, Pepsi leads juices, not Coke, with Tropicana. And that is one of the winning edges we have also got this year. And it's the first time that we will produce it ourselves also, which the production in Pathankot, which is our latest plant, will start by next month. So that is going to give us an edge and growth factor. So apart from that, as we have seen in the north, which was our original territory, we have got enough share against Coke. And similarly, as we have acquired East, if you look at it last year, we are already growing much faster than our competition and adding market share to it. So it's a process. It's not our go-to-market, our cost of operations are much less than any of our competition, and hopefully we'll keep maintaining that and going forward.
Okay. If you could give us some light on the South India demand opportunity, where is Pepsi market share versus Coca-Cola today? How much of distribution expansion there is scope of for VBL?
To be honest, the scope is so high everywhere. But in South, Pepsi is reasonably in good shape, especially in the states of Kerala and Tamil Nadu. They are market leaders, and they are lagging quite badly in Telangana. So it's different state, different issues. Karnataka, they are reasonably okay. So each state has a different issue. And I think scope-wise, there is scope everywhere. I think, the way you look at it is India is sitting on a 22-24 per caps against our neighboring countries, which are more than double. So, if you look at Sri Lanka, Pakistan, Nepal, they are double than what we are. So I don't think, growth is just going to be there as long as you are ready to go to market, invest in the market, in the chilling equipment. There's no reason why the growth in double digits cannot continue for the next 5-10 years.
Sure. Just one more question on the logistics side. Post GST, have you seen any improvement, because our business is logistics heavy? Have you seen any improvement in movement of velocity?
No, absolutely. It has become much easier for us to do business. We have shut down extra warehouses which we had in every state. We go directly from our plant to large distributors and large hubs. So we don't waste time standing in lines and queues in every border. So it has really added to and that's how you see some more consolidation in our EBITDA margins.
Thank you. Thank you so much. I'll come back in the queue.
Thank you, Varun.
Thank you. The next question is on the line of Bhavesh Shah from CLSA. Please go ahead.
Good evening, sir. So my first question is on India. What is the organic India volume growth for the first quarter?
This is all organic only because there's nothing that was acquired at this time. So, practically 98%, 95% is organic. So,
okay.
There's very small acquisition of a small territory like Dharwad, so which really doesn't show.
Okay. So this 4.5%, 4.6% which you reported is more or less organic volume growth for first quarter? Okay. Secondly, so you have mentioned that summer has started on a good note. Can you share some more thoughts on, how was your performance in the month of April? The reason I'm asking is that, we have seen some of the corporates who have sounded off growth moderation. And in this context, it would be useful to know your thoughts here.
No, we've had a good April, and practically 10 days of May are also over. So half of the quarter is over, and with this heat, the way it is going, there's no reason why we should not look at double-digit growth. And this is our peak quarter.
And when you say double-digit growth, this is only for North and East, because South and West you've consolidated.
No, South and West we have just acquired on the 1st of May, so it's very difficult to predict that.
Okay.
I'm talking of our existing territories.
Okay, perfect. So secondly, you did mention in some of the comments that you'll be starting production for a Pathankot facility next month. So is it that the numbers that we're seeing in this quarter, Tropicana is still under the distribution agreement and you haven't started manufacturing of this?
That's right. Most probably Tropicana would start by either in the month of June sometime. It could be. So this quarter, you will actually not see the results of Tropicana being manufactured by us. Okay. It will actually show in the next quarter. Whereas Pathankot has started, the other products have started, but juice has not still started. There's a qualification which takes 2 months, so we are in the process of qualifying right now.
Okay. Okay. Okay, sir. And my final question is on your South and West territory. In terms, I know you mentioned somewhere on your capex, outlook, but do you think you need to incur any additional capex in the South and West region? Maybe immediate in terms of upgrading any of the bottling plant, or say any...
No, the plants are all in good shape, and at the moment, at least for the next year, we don't see any major changes, any upgradation. Might be some minor tweaking, but I don't see any issue.
Okay. And sir, any investment which is required for your back-end operations, because North and East is completely integrated?
So there will be some, for our packaging and our back-end, there will be some investment required. We are in the process of formulating it, but it will be within the level of what we have said, 40 to 50% of our depreciation. It won't be beyond that.
Okay, sir. Perfect. Thank you so much. I'm done. All the best.
Thank you.
Thank you, Ravish.
Thank you. The next question is from the line of Shekhar Singh from Excelsior Advisors. Please go ahead.
Hello, sir. I just want to know, want to reconcile these numbers. Your revenue growth of 24%, and you said your domestic growth is only 4.6%. So, can you reconcile how you come to this 24% growth?
No, 24% is the revenue, whereas volume growth is 4.6% in domestic.
Okay, so volume growth for the company as a whole is 12.3%. Domestic is 4.6%. And international volume growth is how much?
Sir, it's about 80+% volume growth overseas.
Okay, and this growth is primarily on account of consolidation of new geographies. Huh?
Sorry,
58%.
58% internationally.
Okay, 58%. And this is primarily on account of consolidation of new geographies, huh?
No. This is on our existing plants internationally.
Okay.
So we've had a very good year internationally, and it's a sustainable growth, which we've added some new lines, some new products, and that has done extremely well for us.
Okay. And so, what percentage of the total volumes is from international business?
It's
out of 90 million, 18 million is from international and 72 million is from domestic.
Okay, 20%, 80%. Okay.
Yeah, but you must understand one thing. This keeps changing because the seasonality is different in internationally. Africa is summers now, and here, whereas it is peak winters in India.
Yeah.
So our volumes are very low, their volumes are higher. So when you will average it out throughout the year, it won't be that much difference.
Okay. And what is the difference in profitability between India and the international operation?
It's broadly the same. The only thing is the interest and depreciation in overseas used to be slightly more. And the accounting, like in Zimbabwe, the revenue is based upon the local currency to which we have come from this quarter. And then we have to make the currency fluctuation reserve. So there is maybe certain those adjustments, but normally it's more or less the same. Okay. Maybe 2% lower at the EBITDA level.
Okay. So next I just wanted to know, once you take this 1,800 crore worth of acquisition and consolidated, what will be the consolidated debt to equity ratio?
Debt to equity post QIP should be the same where we are, and debt to equity presently maybe 1.2 to 1, and debt to EBITDA will be 2 to 1. Debt to EBITDA will be 2 to 1.
Okay. And lastly, sir, once your Pathankot facility comes on stream, especially the Tropicana one, how will that impact your margins?
No, it would impact our margins quite a bit, because right now we are getting it produced in the west, and we are paying extra freight for transporting all the goods to the north and east. On top of that, we are giving a co-packing arrangement and a margin, so which will all come to us.
Right. So this is what I want to know. So by how much will the margins go up? Or they can go up?
No, they will go up. I don't have the exact percentage.
This should come about maybe anything 15 to 20%, but of course we will know exact numbers once the production starts and we start selling it. 15 to 20% of the top line maybe.
So voice is not very clear, sir.
See, fundamentally going forward, like today, because of distribution only, we are not making any money on Tropicana. But once our manufacturing starts, our margin should be very similar and our EBITDA margin should be very similar to what we are doing in our other business. So, but we don't want to commit anything till we start the production and see it, but it will be very close to what we are already doing. So there will be a big gap actually.
Sorry, sir, but the last part of the answer was not very clear. If you can, maybe the moderator can actually...
What I'm saying is, right now we are buying it from somebody else, so he's charging his margin, plus we are trucking it from west to north and east. So our freight as well as his margin, if we consolidate both that, which will not be paid by us once we start manufacturing, our margin should be very similar to our soft drink margins.
Okay. Thank you, sir. Thank you.
Thank you. The next question is on the line of Kaustubh Pawaskar from Sharekhan. Please go ahead.
Yeah. Good afternoon, sir. Thanks for giving me the opportunity and congrats for a good set of numbers. Most of my questions are answered. So one question on the other expenditure part. This quarter we have seen about 180 bips increase in the other expenditure. Is it mainly because of the consolidation cost which is happening because of the territories you are consolidating on your books, or also it includes the element of higher advertisement and promotional spends before the season?
No, none of these. Actually, the new territory is consolidated from 1st of May, and these results are for the period ending 31st March. And here, the one big item which is making the difference is the foreign exchange currency provision, fluctuation provision for Zimbabwe. That's the difference.
Okay, so how much that could be? Because that could be, one-off kind of a thing.
That may be about 65 crore.
Okay. And so going ahead in quarter 2, should we expect other expenditures to be higher because it is going to be one of the strong quarters for you in terms of domestic business, and so we should expect promotional spends to go up, also the consolidation costs will come in. So on expenditure front, should we expect it to go up in Q2?
Actually, you see, it's again going to be just the reverse because that's a big quarter for us. And because of the operating leverage, our margins are highest in that quarter. Our sales are highest in that quarter. And therefore, the margins are going to be higher. As told in the call previously, in H1, the quarter which is gone and the subsequent quarters contributes about 105 to 110% equivalent of our annual PAT. And about 75% of our annual EBITDA happens in H1. So the next quarter is going to be really quite large.
Yeah, but in terms of...
Over and above the new territory which is coming, 2 peak months of that territory also superimposed onto this, that quarter is going to be really large. And operating leverage on the new territory which we are acquiring, apart from the direct expenses, there is going to be another operating leverage effect. Both together should make the profitability, should reflect on the profitability.
Okay, got your point, sir, got your point. And so what will be the current date on the consolidated books?
Last, we ended at 2671 and about out of this 1800 crore, 1475 or 1480 crore is already paid to PepsiCo, and the balance will be paid by this month end, and we have to add that to the original debt. In 2671 plus 1400, so around 4,000.
4,000 crores.
Yeah, as of late. Roughly, maybe 50 to 100 crore up and down.
Okay, sir. Thank you.
Thank you.
Thank you. The next question is on the line of Jasdeep Walia from Investors and Finance. Please go ahead.
Sir, good evening. Thanks for taking my question. So the investment that you're doing in your plant at Pathankot, I think roughly the amount is 500 crores. What will be the asset turns on this investment at full utilization? By full utilization, I mean including the seasonality impact which we have.
It will be something like 2x.
Sir, but when I look at your current balance sheet, your asset turns, which is sales on gross block, they've never gone above 1 in the past. So on this asset, why would asset turns be?
The difference in this is, this has got a large facility of juices where the seasonality is different, and this is the only plant which is going to produce juice and which will service our whole territory. So our utilization of this plant will be much larger than any other plant which we operate.
Got it, sir. And so also, could you comment on your depreciation rate? At what rate do you depreciate your plant and machinery?
It's on 20 years lifespan for the plant and machinery, and there are certain, most of the items like bottle cells, etc. in 5 years, freezes on 8 years, there is a difference. But the weighted average, the depreciation is about 8%.
Is it in line with the, the standard depreciation rates used by other companies, or you depreciate at a higher rate?
These may be slightly higher, definitely, but higher than the actual lifespan of the asset depreciation. But on the rate-wise, these may be the standards, which, the best of the companies may be using.
Got it, sir.
Including Mexico.
Got it, sir. Thanks a lot for taking my question, sir. That's all.
Thank you.
Thank you. The next question is from the line of Sajal Gupta from FE Securities.
Yeah, good evening, sir, and congratulations for a good set of numbers. I just wanted to know a few things. First thing is that you had increased your capacity in Zimbabwe. What is your current capacity there? And when was this capacity increased?
This capacity was increased end of last year, so about December 1st. And it's in full, both the lines are fully operational now. So the first quarter has seen the full utilization of both the lines.
And if you're interested in knowing the number of cases, if we convert the BPM and the 28 days working in a month, and then it works out to 25 million cases.
25 million cases. Okay. And this regarding last year, I think you made a turnover of 560 odd crores in Zimbabwe, and you had made a PAT of 75 crores, if I'm not wrong, 75 to 80 crores approximately, on which you have done a provision of $7 to $8 million because of currency exchange fluctuation. Am I correct?
Yeah, the last year 468 crores of turnover we did, and PAT before adjustment, 120 crores before the adjustment for the foreign currency. If 65 last year we had provided as a provision, because that's the time we were anticipating the linkage of the local dollar from the dollar, the currency which was of the use. So 65 last year and around the same in this quarter, so which takes care, and now the accounts are aligned to the local currency of trade in that country. And going forward, I don't think there will be much variation or provision will be required.
But this provision will be reversed in some way down the line? Do you see this?
No, in fact, actually last time when we made this provision, that's the time when, it was only a provision as a prudent policy. But unfortunately, by February end this year, government actually de-linked both the currencies. And now it is required from the auditors to provide for that currency difference, so which we have accordingly done under the advice from our auditors.
My question is that if you are providing, do I see a reversal happening down the line, or is it just provided and is gone?
Not exactly. I don't think they will be reversed, because
we are talking of 140 crores right now in 2 quarters.
Yes.
Last year 75-80 crores, and now we are talking of 140 odd crores amount.
130
provided right now. So do we see a write back at some point of time?
Not exactly. This is what I'm trying to answer, is that the currency, how I will explain you is that earlier the local currency, which is called RTGS dollar, was freely exchangeable with the US dollar. Now these both are de-linked. And for any the foreign exchange exposure, because my loans are in foreign exchange, I have to buy the dollar from the open market. So if dollars in open market are available in premium, so for all my dollar-related liabilities, we have to, bring those at the level of the current prevailing dollar rate with the local currencies. So which necessitated this provision, which has accordingly been done. And I don't think this will be reversed, because as and when we'll be buying dollars, we will have to actually pay for it that much.
Okay, and do you see this provision going forward also? That means in every quarter you will be having this kind of provision?
No, post that, as advised by our auditors, we have already converted the total balance sheet, in fact, to the local currency. Earlier, our invoicing used to be on US dollars there. Now, invoicing is happening on the RTGS dollar basis. So, there won't be any, major provision required in future. And this will be like any other country we operate in. So, some entry will be there, because even in India, for example, any foreign exchange exposure has to be, the foreign exchange variation has to be, accounted for. It's going to be one of those items going forward.
Okay. Tell me another thing. If you see the consolidated and the standalone numbers, you people have, in the consolidated numbers, there's a loss of 15 odd crores from the international territories.
Right.
And which are those territories which are still bleeding right now?
Well, this has come because of this 65-70 crore provision only. If that conversion of the total balance sheet, if this quarter would not have happened, so there was no loss. Last year was same 14-15 crore loss. This year, with the improvement, that loss would not have been there. This is only because of this provision happening in the one of the weaker quarter.
Okay. So tell me, could you throw some light on Morocco? Because Morocco, I think, again, was quite a huge loss-making country for you.
Yes.
So,
luckily, you are saying used to be. You're right. In fact, as the chairman, mentioned, Morocco in last quarter, the volume growth had been 71.6%. Historically, in Morocco, when we purchased, there was a non-compete for water, and wherever we were going, it used to be a challenge to offload only the CSD and the water if we leave the customer to buy from someone else. So that used to be challenged. But after non-compete is over and we have installed the water line, we have become comprehensive beverage supplier. Since then, we are registering month after month growth. So last 3 months, average growth is 71.6% in volume, and April also had been on the same track.
But that means for the current year, we don't see a loss. I think there was a loss of 40 odd crores in Morocco at that point in time last year. So we should
till last year, yes. Till last year, it was always
we should start making
always used to. That's right. It always used to show a loss, which is reversed from this year only.
Okay. So basically, all your international territories will start making money now. Other than Sri Lanka, which you said the sugar problem is also now.
We can take one by one. Morocco, I explained already. Zimbabwe from the day one is a market leader. Zambia, we never had losses. And Sri Lanka last year was exceptionally because of the sugar tax. From December, that situation turned around, and it's again growing. And initial years, of course, first few years it was a startup. Now Sri Lanka also is good. Nepal had been good from the day one.
Day one, okay. So we see all the international territories doing good.
That's right.
Last thing. That's very, very good. So I just wanted to know about your debt. You said your debt now stands at 4,000 crores.
Yes.
As of now.
Yeah. 4,000 in the interim. But by this quarter end, I think the figure should look entirely different, because we are sitting in the peak quarter where every day, enough cash is generated. And I don't have calculation to give you the number of 30th June, but it should be substantially lower. And post QIP, this number should be at the same level where, last year in December we ended. And by then we also would have consolidated such a major territory of about 35% equivalent footprint to our existing business.
Okay. And when are you planning to do your QIP?
Well, we have not yet decided it. By our bankers, we have been advised to just hold on because let the new territory be consolidated, let the consolidated results be made, public, and also, in India, results are over. Also, we will have to, we will have to wait for some more time.
Okay, so basically we are talking somewhere in July and August because
at least till then. At least till then.
Till that time. Okay, fine. Thank you, sir. Thank you for answering the questions and all the best to everyone.
Thank you very much.
Thank you. The next question is from the line of Atul Mehra from Motilal Oswal Securities. Please go ahead.
Yeah, this is from the asset management team. So just one question in terms of return on capital for us. So last year we ended at 13.8%. So what is the outlook for this particular number if you were to think about it for the next 3 years' time? And what
Sure. This 8 point something which you're referring to is 2015. When, that's
13.8. I'm sorry. Maybe I said 13.8%, not 8%.
Okay, 13.8%. See, year after year, we are increasing it anything between 2 to 250 basis points. And the trend like that will continue. Maybe, 1 year we have to see the major territory which we have acquired. But otherwise, improvement of 200 to 250 basis points should go on. And that will basically be coming because of the better utilization of asset turn. And so far, the capacity utilization is under 70% in our territory. So that means about 40% of capacity, we can increase without even investing anything behind this. And working capital number of days are also improving substantially year after year. And both together should help us in improving our ROCE.
And so just to talk about the capacity utilization, so given it's a seasonal business, wouldn't 70% be an optimal number by itself, or would we have even more room to increase capacity utilization?
As explained in the earlier calls, we calculate the capacity utilization only for the peak months. For example, for North India, the peak month is May, in which we do 17-18% of our annual business. So the capacity utilization of 70% is for the peak month. Rest of the months we don't calculate it.
Got it. And the second part of the ROC component in terms of margins, so do you see scope for margins, EBITDA margins to improve from here on, or you think we have, in terms of optimized on the margin part?
Potential on that is very less. These, may go up in 1 year slightly, may come down slightly. But our guidance is anything within the vicinity of 20% we are happy with.
Pretty much where we are in terms of...
That's right. Last year was few basis points lower because of the 5 sub-territories getting added in. This year, those territories getting stabilized may go up slightly, and with the new territory from PepsiCo coming in, may be coming to the same level, but won't differ much from that level.
Got it. Great, sir. That's it from my end. Wish you all the best. Thanks.
Thank you.
Thank you. The next question is from the line of Rajiv Gupta from RBC Financial Group. Please go ahead.
Yeah, thank you. I'm still a little confused about this foreign exchange, provision which you're making. You call it a reserve, you call it a provision. Have we actually incurred that loss, actual loss, or is it merely a book entry? And what is the justification of creating a reserve or a provision against future losses which you may make on your loan repayments in dollar terms? It's just not coming out clear. I mean, it's a very large sum of about, $16-17 million in 2 quarters.
This is the provision, and this is the provision on the dollar liabilities sitting on that balance sheet. And earlier, there was one account for dollar and the RTGS dollar. These were interchangeable. And sometime in February this year, local government, or the Reserve Bank of Zimbabwe decided to de-link those currencies. So now the dollar to repay our liabilities, dollar-related liabilities, as and when they will mature on future date, we will have to buy the dollar from the market by paying RTGS, which is my earning. Earlier I was earning in dollars, now I am earning in RTGS. So the differential between the two I am providing. It's not paid yet, but it is a provision to be utilized at the time. Say if I have to discharge this dollar liability today, I have to spend that many more RTGS dollars to buy US dollar. So as of date, this has been provided based upon the exchange rate of that day. And it's only a provision as of now. I hope I could make my point clear.
Yeah, but is this a mark-to-market loss on that? And if it's only a provision, then why did you say that it can never be written back?
Because unless the exchange rate between RTGS dollar and US dollar, reduces, then will be written back. But we don't see a possibility of that because that, local currency can't be more stronger than US dollar. So I don't think it will ever be, occasion to write it back.
If that be the case, then the similar provision can happen next quarter also. You are saying it will not happen in future quarters. If the local currency devalues against the dollar next quarter, you will require to make another provision. Why do you say that it will not be required in the next quarter then?
Yeah, exactly. My assumption is based upon this. I had to change or convert my balance sheet into the local currency once. There are certain assets, fixed assets or the things which will stay there and now will not be changed. I don't have to create those fixed assets, plant machinery again. And the only dollar-denominated liabilities are to be converted to that date. It can be, but it will be limited to dollar liabilities only. But having said that, my earnings also are increasing in dollar terms again. Since that has happened, we have started exporting from that country to the neighboring countries like Botswana, etc. And our effort is going to be matched to the same level, therefore no additional requirement of any provision happens. But still that possibility can't be ruled out. And it's never going to be of this magnitude because I don't have to convert balance sheet again. Having done once, and it's in RTGS terms, that has nothing to do with dollars going forward.
Okay, not exactly clear to me, but I'll let it pass. I have another question.
I'm happy to answer and explain it offline, and you're welcome to contact.
I'll call you. Okay, my second question was on Tropicana. How much, in terms of when this whole thing migrates from an overseas outsourcing purchase to local, what kind of numbers are we thinking of, are we estimating in a full year, calendar year? And how much of it will be captured in this year? I know you can't be sure till the production starts, but what numbers are we talking about?
See, here we are about 9 to 10 million cases. And number one, it's not imported. It's presently getting co-packaged from a third party in Baramati, Maharashtra. And when the chairman said that from west to the north, it comes with the saving on freight. And presently our arrangement with PepsiCo was till recently, it's only distribution. And distribution margin for us was very close to our actual expense. And when we will be producing and distributing, margins should be, as explained, somewhere near to our CSD margin.
Yeah, but I'm specifically looking for an annual number on this, a turnover number on this product.
10 million cases multiplied by... so if 300 rupees, if we take as a ballpark figure, or Tropicana, should be about 300 plus crores.
So this could add, if it the same margin at some level, it could add about 60 crores to EBITDA.
50 to 60 crores, that's right.
To EBITDA. Okay, that's what I was looking for. My next question was on this 4% growth the first quarter. Was this an unusually colder quarter than the normal warm quarter, or the quarter we have from January to March?
Actually, answer is yes, because February this year was chiller than, the earlier years, and this is with the degrowth of 20% in one single month of February. So we ended the quarter with a positive 4.6.
And also, Holi was very late this year. Normally our season starts with Holi. So that also made a difference.
So in a way, it was unusually, as far as weather was concerned, it was unusually negative weather this year. That's the point you're making. In spite of that, you did a 4% growth on the domestic volumes.
What, we couldn't get you?
I think in spite of a colder weather, you still eked out a 4% growth in this quarter.
That's right.
Okay, my last question was on the Pepsi takeover. How much of the peak season will we be able to capture in the new Pepsi territories, or have we lost most of the peak season and the full impact in the peak season would come next year? If you could give us a flavor on the transition from Pepsi to us, and have we lost May, June, July, August, or...
No, we have got the territory from May 1st and the plants are running, so there's no reason to... if the business has been transferred to us, so it is continuing as normal, so there's no reason for us to lose any volume.
Oh, I understand. But ramp up, obviously, to your levels and your...
Well, ramp up to our level won't happen so fast. That's why we say at least a year it takes us. And that is what we are expecting. Like last year when we took over the 5 states, we have ramped up this year and we are getting great results out of those.
All right. Thank you. That's all.
Thank you.
Thank you. The next question is from the line of Rakesh Roy from Asit C. Mehta. Please.
Hi, sir. Sir, my first question is regarding your India volume is impacted due to the extended climate, sir. So, what is the normal volume you are expecting in this quarter, sir? Q1, if the climate change is not happen?
We would have been expecting a 10% growth, a double digit.
Okay, 10% growth, sir.
See, what happens is annual growth is about double-digited, year after year we expect in our business.
Okay.
And when we break it out quarter-wise, every quarter may not show exact, in that proportion, right, because the seasonality plays a role, and sometimes, the Holi is earlier or later, or Diwali is earlier or later.
Right.
Based upon certain factors, it may be only a lag, maybe it's actually gone slightly to the next quarter or come early. That's the only difference.
Right, sir. So, sir, my next question regarding, sir, if recent cyclone come, any impact on your business in your side?
Well, there is a impact, but only in the state of Odisha.
Only Odisha, sir. So how much you are seeing? How much the impact is there in terms of a percentage?
Overall, Odisha itself has no impact on us. It's maybe 1% of our volume, so it has no. But otherwise, whatever that 1% will be, there will be some impact because.
Right, sir. So my next question regarding your international business. For this quarter, your international sale is 20% of total sale nearby. So this trend we see in near future also, sir? This growth in...
this quarter, India becomes very large, so international sales become much lower comparatively.
Okay.
Because for India, first quarter is very low. So that's why the percentage looks higher.
Okay, sir. Okay, right, sir. So, sir, give me a guidance. How much the realization for international business and for Indian business? Because this quarter you have got nearby 151 for the cases, sir, no?
You are asking about the values?
Yeah, realization from domestic or international business.
In the quarter one, our realization from India had been 985 crores and the realization from international is 373 crores.
73 crores, sir. Right,
yeah.
Sir. Okay,
373, out of which 65 provision is to be made for Zimbabwe.
Okay, 65 is Zimbabwe, right, sir. Okay, sir. Thanks, sir. My sir.
Thank you.
Thank you.
Thank you. Ladies and gentlemen, that was the last question. I now hand the conference over to the management for their closing comments.
Thank you once again for the interest and support. We'll continue to stay engaged. Please be in touch with our investor relations team for any further details or discussions. Look forward to interacting with you soon. Thank you very much for your participation. Thanks.
Thank you.